All right. Good morning, everyone, and thank you everyone for joining. I see some more people trickling in. This is our HCM quarterly meeting presented by us, Central Payroll and the Share HCM team. My name is Alex Guzman. I am the payroll trainer supervisor here at Central Payroll. Many of you have worked with me in some trainings. Along we have the Share team and Audrey Beck, the bureau chief for Central Payroll. We're going to go ahead and start this off with the Share team, and I'll hand it off to them.
Okay, that's my cue. Good morning, everybody. My name is Vanessa Martinez. I'm with the Share team. I'm the Share project manager. I just have a couple of reminders for all of you when it comes to Share and the help desk. As of this past Monday, last Monday, all of the Share tickets, issues, supports are to be submitted to the new email share.help@dfa.nm.gov. We've transitioned everything here within DFA. The new number is 505-827-1234. So we are funneling all HCM, ELM, and financials, which financials has actually always been here, but we went ahead and did transition HCM and ELM here. So they'll be going through Alberta and her lovely team, and they'll be funneling them to the Share team, to the prospective places that we handle. So if there's any questions, issues, I just wanted to put that out there for all of you who, deal with maybe HCM recruitment. Please use the new email. And then the next thing is MFA. So I just wanted to do a few reminders here. We've had a lot of instances with individuals trying to log into Share with their email. Nothing has changed here. Your usernames, please pass this information along to your users, to the employees within and staff within your agencies. The Share ID is not changed. It is your employee ID dot last name, or all capitals. Nothing has changed. So I just really wanted to get that message out there. If you get questions, to assist your staff, perhaps in logging in, that's a big issue that we've seen, and it's just a user error because they're trying to use email. I just also want to remind everyone that forgot password works seamlessly now. If you have set up your MFA forgot password, the link on the login screen, that works. Please encourage staff to click it. They will get their recovery option, and they'll be able to reset their passwords. Passwords are not changing now. We have actually a longer life on the passwords, so they're not changing as frequently as they were. So just want to put that out there as well. The other thing that I wanted to pass along inside of this slide deck, when it does get out to you all, is the MFA training video link. This is a YouTube link that you're able to pass on to your new staff as an onboarding mechanism and tool, because they obviously won't be able to get into ELM to watch the video that's in there. It is in there and available as well. However, just to be proactive so that they understand how to set up their MFA, I thought that maybe you all would like to have this as part of your onboarding tools. And that's all I have. If there's, not sure if we're standing for questions immediately, or if there's any questions at all.
No questions right now that I see, but yeah, we'll take questions as they come.
Fantastic. Okay, cool. Well, that was all I have. I'll go ahead and pass it on to Mikkel and Jim.
Awesome. Thank you, Vanessa. All righty. I have a few updates to talk about today. So first up is a cleanup process our team has been working on. There are a few motivations for this process to clean up additional approvers. The first is that this is going to help with performance. So if an employee has 10 additional approvers that are listed, and when they go into enter time, 10 rows on the workflow tables are generated each time they enter time. So as you can imagine, these tables can become quite massive quite quickly. So we're having a process that's going to go in and clean up these additional approvers where they're not really needed. The second motivation, and Jim's going to cover this in a minute or so, is for the enhanced timesheet security. So in order to roll this out for your agency, the prerequisite is that your additional approvers need to be clean. They need to be, exactly this manager needs to see this employee and this employee. And so if you're a larger agency, this task can be pretty large to do. So we're hoping this process will help alleviate some of that cleanup. So this isn't in production yet, but we'll send out communication when this is ready to roll out. This will run bi-weekly. So if this ran for this current pay period, if this was in production, this would have run on the 22nd and with an effective date of the 22nd. And it's going to go in and clean up additional approvers if they fall into one of the four categories that are listed here. So the first category is if the business unit that the additional approver is at is a different agency than the one the employee is at. So this happens a lot when an employee transfers to a new agency. So in our example, John Doe transferred to DOH, and the additional approver that was at OSZ was not removed. So this process is going to go in with an effective date of 11/22 and remove that OSZ additional approver. The next category is if the position that's listed as the additional approver is also the position that the employee reports to in job data. So that manager already has access to approved time for that employee. So we don't need to generate an extra row on the workflow tables by adding them as an additional approver. So it's just going to clean up that duplicate row. The third is similar situation. The position that's listed as an additional approver for the employee already has access to approved time for that entire agency. Same deal. If they already have access to approved time, we don't need to list them as an additional approver. And so this process will go in and remove them. And finally, this is just minor data cleanup. If the position that's listed as an additional approver is in an inactive status, this process will remove that position as an additional approver. So if for any reason that row that's 11/22 or whatever it is when that process runs needs to be removed or modified, please submit a help desk ticket to that new email, that share.help. We can get that taken care of for you. I'll pause here. Are there any questions, comments, concerns?
We do have a question
Okay.
from Alonzo Baca. Can I add an additional approver to my timesheet, or will someone in our agency have to do that for me since I am updating my own information?
You'll have to have someone else for any of your own data. Another user will have to insert data for you. Yeah, Alonzo, you're at the legislature. Maybe we can talk offline. This will be a little bit different for you all over there. All righty. Yes, okay. If there are no other questions, I guess we can go on to the next slide. All righty. The next one is 1095-C forms. So legislation was passed. This Paperwork Burden Reduction Act was passed in December of 24. And what this does is it removes the mandate to mail out the form to each individual employee. So as a result, HCA is not going to be mailing out all these forms to employees. Rather, if an employee requests that this form be printed, HR will have the ability to go into Share and print the form for that employee. These forms will still be available to employees in self-service. So none of that is changing. So it'll still be the same navigation, same process to pull up that form for yourself. But for HR, the navigation to this form is you'll hit the navigator on the top right. You'll hit the benefits, then ACA annual processing, transmittal and forms, and then view form 1095-C. And we do have a job aid on printing this form if you need further assistance. And you can also, of course, submit a help desk ticket and we can walk you through this new process. And then I see there's a question. Will a notice go out to all state employees regarding the 1095-C form? Yep, that will be something HCA will be distributing sometime in the future. But we have been talking to them about that. Okay. Any other questions, comments, concerns here? Will the employee be able to print the form as well? Yep. So that's, yeah, so it's still the same deal. We'll still make this accessible through employee self-service. So if you don't know, you can access this form through the employee self-service homepage. You click the benefit details tile, and then you'll see a tile that will say view form 1095-C. And then from there, you'll see for each of the tax years, the form is available for you. And all employees with access to share. Okay. Alrighty, I think we're good to move on to the next slide then. Oh, sorry, one more. Will we have access to previous employees that left within the year? Yes, if they left at your agency. So you'll only have access to employees that are at your agency. So if they terminated with your agency, you'll still be able to access those forms. Okay. Alrighty. I believe this is the final slide of mine. So later this week, we'll be rolling out a new save edit. So when you're entering a new row on job data, you may notice that if an employee has an A, B, or C on the eligibility field 1, that when you click save, that value is removed, so that A, B, or C is wiped out. So you can see that on the second screenshot. There's no action you need to take on this, and there's no, cause for alarm. We're just putting in this edit to clean up that historical data. This used to drive what benefit tier an employee fell into, but since the benefits changed in July, these A, B, or C values are no longer needed. So the save edit is going to clean up that data kind of on a rolling continual basis. This will only impact rows that are effective after July 5th. Anything prior to that date, that A, B, or C will not be removed. And this will also only impact the A, B, or C. So if an employee has a SEPA value in that eligibility field 1, so FPL 1, 2, or 3, that will be unimpacted. So this will be rolling out, I believe, on Wednesday. So moving forward, you'll see this change. Alrighty, any questions on this one? Okay, well, that's it for me. So I'm going to hand it over to Jim.
Good morning. Good morning, everyone. I'm Jim Hightower. I'm share support for payroll and time and labor, and I have a couple things to go over. First thing is that a new item will be appearing on the W-2s for 2025, and that is with regard to overtime reporting. So you may or may not know that in the past summer, Congress passed a new law called the One Big Beautiful Bill, and it allows for qualified overtime to be deducted from your federal income tax. Individuals up to 12,500, joint filers 25,000. So between 2025 and 2028, we're going to be reporting qualified overtime, which is only the half-time portion of overtime. And that will be reported in box 14 of the W-2 for 2025. This might change for the tax year of 2026. We don't know yet, but at least for 2025, we will be reporting your qualified overtime in box 14 of the W-2. So that's coming in January. I see there's a question. Any change to small person agency where time is approved? I'm not sure what that question is for. And our overtime and approve the others. I'm sorry, I don't understand the question.
I think maybe this was related to the question Alonso asked. He asked how to update the additional approvers for his own record. So your process at the agency isn't changing with anything we're doing with the cleanup process.
Oh, you mean for the approvals, right?
Correct.
Right. Nothing's changing on the approval process with this cleanup process. Okay, any OBB questions? If not, I'm going to go to the next slide.
There are a couple of questions, Jim.
Okay. Oh, qualified overtime. So the qualified overtime is overtime that's paid. When you work overtime, you're paid at time and a half. The qualified piece is the half time. So we're not reporting the full pay that you are paid when you work overtime. It's the halftime portion. So the first full amount of pay that you're paid per hour, that is counted as regular pay. The 0.5 is the qualified overtime. Will there be a memorandum sent out to employees to explain the changes? Audrey, that's probably better for you, maybe.
No. The employee will get their W-2 and they will have that information on their W-2. They should be referring to the back of their W-2 for what the boxes indicate. There's no reason for us to notify employees. We don't even have access to individually notify all employees throughout the state. So I couldn't send out a memorandum to all state employees if I wanted to.
Okay. All right. And then the next thing I wanted to, you can go to the next slide. Next thing I wanted to throw out is a reminder. We talked about this in the last quarterly meeting and had a lot of interest in it with regard to rolling out a customization that we have for access to the timesheets. So let me just explain quickly. Timesheet access for managers, as is delivered today, with the exception of the 14 agencies that we've rolled out this new customization to, what a manager can do is a manager can actually see the timesheet for everybody in your agency. They cannot necessarily approve the time for everyone. They can see the time. They can actually make updates to the timesheet. So what we've developed is a customization which restricts the access of managers, and that access will be based on, number one, only those employees who report to that manager. That's the first thing. Then the second thing is only people who have this manager in their position listed as an additional approver. So going back to Mikkel's discussion a little earlier, this becomes very important with the additional approver cleanup. If we want to roll out access to your agency, those of you out there who have implemented this, you know what I'm talking about, that there's cleanup involved. It's sometimes pretty intense because there's a lot of bad information out there because we've had this additional approver set up in production since 2017. So over time, you can imagine people are not updating the records accurately, then a lot of junk starts to exist out on the database. So anyway, what we'd like to invite you to do is to talk to us about implementing this custom security where managers' access to timesheets will be restricted to only those people who report to them or who they're listed as an additional approver for. So if you would like to talk to us about implementing that for your agency, you can submit a help desk ticket, and Mikkel and I would be really happy to talk to you about it. And if there are no questions, that's all I have.
All right, thank you, share team. Didn't have one question pop up. Is it tied to position?
Yes, this is position-based. The security is the additional approver access is position-based. It's not based on the employee ID.
Awesome. Any other questions for the share team before we move on? All right. Going into the Central Payroll Bureau part, and I'm going to hand it off to Audrey.
Good morning, everyone. Thank you for joining us. I realize that the timing of this meeting is not necessarily the best for everybody, considering it is a payroll week and it is a holiday week. So we really do appreciate you taking the time to join us for this information. We have a lot of information that we're going to be discussing over the next couple of hours. So if you feel like it's an overload, I apologize, but unfortunately it's that time of year where we end up throwing out a lot of things that we need to do as we prepare for the new calendar year. So the first thing that I want to talk about is the compensation plan enrollment. And we are finding that agencies are not necessarily always checking these two screens, and it's really important when you rehire someone that you make sure that these screens are correct so that the employee does get the credit for the correct compensation leave plans that they are entitled to. So as you can see, this has an effective date of when the employee rehired. And when you go in and look, they are all inactive. All of their comp buckets are inactive, including their personal time, their holiday accrual time, their overtime buckets. They've all been inactivated because the person terminated and came back in. So in order for these buckets to become activated, you must go in and reactivate each particular one, as you can see in the lower screen where they have all been reactivated. The navigation to get to these screens is HCM time and labor, compensatory plan enrollment. And if you select view all, you can check all of the plan types that are in the active status before entering time on the timesheet. If the leave buckets are not timely updated, meaning they haven't been updated when you rehire them, then you're not going to see the accruals on their timesheets, and then you're going to have to reach out to Central Payroll to coordinate with getting those leave balances updated. So we are asking that when you rehire someone, please make sure that you do go in and validate that all of their comp time buckets have been reactivated. Next slide, please. So the same is true with the benefit service dates. This is another area where we have a lot of adjustments that have to occur because employees get rehired and nobody is validating their benefit service date. So upon the rehire of an employee, it is essential to update this. To determine the accurate benefit service date, there is a cumulative leave worksheet that is posted on the website that you can use to determine how much service credit each individual is entitled to based upon their prior experience with the state. The benefit service date drives the annual leave accrual. So if you are not updating the field, then the employee may be under accruing or over accruing. We have found instances where the accruals that were in the system were not accurate, and people never corrected them until they realized there was a problem. So it is very important that you, whenever you have a new hire, you complete that cumulative leave worksheet and make sure that you update the benefit service date in job data.
And that is an example there of that sheet here at the bottom of what that cumulative worksheet looks like and how to fill it out. And if you have questions regarding this or unsure or it's not looking right, definitely reach out to the trainers here at Central Payroll, either me or Claudette, and we can help you out with that as well.
And one other thing to remember, if you forget to do this upon rehire and you go back and do it at some future date, it is not going to correct the accruals that have already occurred. You will still need to coordinate with Central Payroll to get the leave bucket corrected for any time span that was not accruing correctly. All right, any questions on those two items? No, we do not need to reactivate COVID-19 because COVID-19 is no longer a leave option. There is no longer any COVID time. I am sure there is a query that shows active employees with inactive comp plan enrollments. I could not tell you what that is, to be quite honest with you. If you reach out to Suzette, she may know exactly offhand what that query is. Otherwise, reach out to the share team to be directed to the appropriate query to use for that.
Awesome.
All right, the next thing that we want to go over, and we alluded to this in our last quarterly meeting, where we were going to make some updates on how we deal with the non-resident aliens in HCM. And so I just wanted to give everybody some background here. So if you go on to the Central Payroll website, there is a memo that is titled FICA and Medicare Exemption Memo, and it dates back to July 1st of 2014. And the relevant portion of that memo is what I have shown on the right-hand side, that it does explain that the Internal Revenue Service requires that non-residential aliens follow special instructions when completing the W-4. So this is not something that's new. This is simply something that we have not made sure that we were actually adhering to. And we definitely want to make sure that we are adhering to it, because as you can see in MAPS HR 2.6, the policy states that the state is required to withhold federal income tax, state income tax, Social Security, and Medicare from wages paid by the state. All wages paid through HCM are subject to the appropriate tax withholding based upon the required contribution rates and W-4 selections. So while the memo is kind of an informal requirement that we adhere to it, MAPS is actually a requirement. And so because we are required by MAPS to adhere to it, we wanted to, moving forward, make sure that we were addressing the non-residential aliens in the appropriate manner. Go ahead to the next slide, please. So the special withholding for non-resident aliens using a W-4, they get to use the same W-4 form as everybody else, but there are certain things that they can and cannot do. So you will see I have highlighted the instructions on the right-hand side of the pertinent areas that we need to pay attention to. So for instance, in step 1C, they can only file as a single or married filing separate. Those are the only options that they have for filing with the W-4. A single and a married filing separate both get the single tax rate. So either one of those, it really doesn't matter. It's still going to be considered a single tax rate. And that's why you'll see we have marked single in most of our information that's following, is because regardless of whether you check single or married filing separate, it is still the single tax rate that is being withheld. In our previous meeting, we had said that they were not able to claim dependents for the dependent care deductions. But if you look on the instructions, there are certain non-resident aliens that are able to, that may be able to take this deduction. Those are Canadian, Mexican, South Korean, or Indian. And it says they may be able to claim it. So they would need to research through publication 519 and publication 972, whether or not they are eligible for that deduction. Because most of them are not. I would require, if one of them are indeed choosing that deduction, that they provide you the printout from publication 519 or publication 972, where it does allow them to have that exemption on their W-4. Step 4 is a step that I have not seen. Maybe agencies are doing it, but I have not seen it. And that is, they are required to write non-resident alien or NRA in the space below step 4C. So essentially that blank line right above their signature is where they should be writing non-resident alien or NRA in order to indicate that they are submitting the W-4 as a non-residential alien. And then you will notice that they are not allowed to file exempt from withholding under any circumstances. So under no circumstances is a non-resident alien allowed to submit a W-4 requesting to be exempt. Okay, so next slide, please. Oh, we have a question. Oh, sorry, no. So we have made some changes in HCM in order to assist you with getting this information into the system. This is something that we have not done before. And so agencies are being asked for next calendar year to make sure that all of your non-residential aliens do complete a new W-4 and are input into the system as we are instructing right here. So you will see that this is a screenshot of the update tax data screen that is in HCM. And to get to that screen, you simply go to Payroll for North America, Employee Pay Data, Update Employee Tax Data. You will need to insert a new effective row date. And under where it says Special Withholding Tax Status, you will need to change that to non-resident alien. And then, of course, their tax status should be single or married filing separate. Those are the only two selections that you can make in tax status if they are a non-resident alien. Next screen. In addition to that, if you scroll down a little further on that same screen, you will see the tax treaty / non-residential data. This is also required information that will need to be input into this particular screen. So once you open up the screen, you will see that the following fields are open for population. So under the country, you will need to enter the country that the employee is from. So it's a drop-down menu. You can select from the drop-down menu what country that employee is from. Under treaty ID, you will always use the TIAS. The TIAS is what is tied in the system to treaties that are set up with the US. These are provided by Oracle. We're not inputting them. We don't change them. That's why we're asking you to use TIAS, is because this is the delivered product from Oracle. And we do not have the manpower nor the expertise to research all of the particular treaties that are available to non-resident aliens. So we're not doing that. Just please make sure you use the TIAS. The next thing that you must enter is where it says NRA withholding rule, and you must indicate that they are subject to this rule. What that does is it actually increases the tax withholding by adding additional earnings to the employee's pay. This is part of the way the system operates and the requirements with the IRS, because non-resident aliens are not allowed to take the standard deduction. So what that does is it essentially adds back the standard deduction to their earnings when they're calculating the tax withholding for non-resident aliens. Next screen. If you have a non-resident alien that does not want to submit a W-4, then they must submit an 8233. I would never request an 8233. I would never mention an 8233. An 8233 is when a non-resident alien wants to, instead of using the W-4 withholding tables, wants to use the exemption from withholding based upon a tax treaty. So I have provided a couple of links to the IRS website. One will provide you with the 8233 PDF, which you have an example of on the right, and the other is the instructions for the 8233. It must be completed annually to be valid. So anytime they choose to use an 8233, they must complete a new one every time there is a requirement for a new 8233, and we'll get into those in a minute. But an 8233 does cover compensation for dependent personal services, and you will see it says compensation for such services include wages, salaries, fees, bonuses, commissions, and similar designation for amounts paid to an employee. You'll also see in the smaller box that it says this is for compensation for which you are not claiming a tax treaty withholding exemption. Oh, I'm sorry. If you have compensation that you're not claiming the exemption, then you would use the W-4. So our recommendation is definitely to get a W-4, but some of your visa holders may present you with an 8233 instead, and there are additional requirements for that. So go ahead, Alex. So the additional requirements for the agency 8233 is agencies are now responsible for reviewing the information for accuracy. If an employee hands you an 8233, it is your responsibility to make sure that all of the information that they entered on that form is accurate. Agencies must also complete the form. You'll notice that I have here the snippet that says that you are accepting this and you are indicating that it is accurate. After you have signed off on this form, you have 5 days to submit a completed form with all of the documentation to the IRS. And then the IRS has 10 days after you mail it to determine whether or not they are going to accept it. Okay, so you will see that I have highlighted the 8233 instructions, which gives the withholding agent's responsibility. It does say you cannot input the 8233 into the system until you have given at least 10 days for the IRS to respond. But it does become effective when the employee submitted it. So even though you have to wait 10 days for the IRS to respond, it does get backdated to when the employee gave it to you. So those are some additional requirements with the 8233. Go ahead and move forward, Alex. There's a slide missing. Move back, please. Move back. Okay, there's a slide missing, but go back to the one with the again. Go back one. Go back one. Go back. Okay, right here. So no, go to the next one. Okay, Alex, I need you to go to the right there. HCM input. Right there. Okay. Next slide. So right here where it says education and government, if you open that up, it will present you with another screen. So I just want to go through the slides again and make sure that that slide's not there because it was there this morning. So next screen, please. Next screen. Okay, so this is where you input the 8233 on the W4 screen. So if the employee has a tax treaty, then the highlighted fields need to be updated on the education and government. And I have put the snippet of what they give you on the 8233. So box 8 says date of entry into the United States. That is the information that you would put on the date of entry. Of course, you will check yes for the 8233 was received. The form 8233 expiration date, as I said, must be given to you on an annual basis. So my recommendation is rather than running it for a year when they give it to you, you make all of them expire on the 31st of, or on the 31st of December. So that way, you know, as part of your year, your calendar year cleanup, you have to get a new 8233 from them. The treaty expiration date also can be the expiration date of the 8233, or it can be if you use the December a year from when they provide you with that. And then the form 8233 effective date, as I stated, is the date that they presented you with the form. Once you input all of that information into the system will automatically calculate according to the treaty that Oracle has set up. Okay. Now can we go back to the prior screen, Alex? I apologize. So some key details regarding the 8233. As I said, it is an annual submission. A new form 8233 is required each calendar year that the individual wishes to claim the tax treaty. Multiple forms may be required. You must get a new form each tax year. If the employer changes, if an employee transfers to another agency, they have to present a new 8233. If their type of income changes, so if they were earning, I know we don't do contract employees through HCM, but if they went from a contract employee to a regular employee, then they would have to complete a new 8233. Changes in circumstances. So if the individual's circumstances change during the year, such as a visa status type or a job type change, they would have to present a new 8233. And then, of course, there are deadlines. So the form should ideally be submitted to the employer before the first payment of the year for which the exemption is claimed. because this will move them from a potentially 30% tax bracket through a W-4 to whatever the tax treaty indicates. So the timing on these is essential, and it could potentially save your employees a lot of withholding, but it also puts you at a higher risk to ensure that all of the information that they are submitting is accurate. My recommendation is we do not mention an 8233, but if an employee presents us with one, we accept it and we now know how to deal with it. So are there any questions on non-resident aliens and how we should be handling them moving forward? No, the agency has to submit to the IRS. DFA does not get the information. You do not submit it to us. So we would have no way of providing that information to the IRS. Is there a query we can pull to view what was used to verify citizenship? We usually get the screen when we hire an employee in HCM. If you are using the citizenship screens, I think that there is a way to pull that information. But to my knowledge, there is not a screen or a query that pulls any information from the screen that we normally use to input driver's license and social security for I-9 verifications. So I'm assuming you're talking about where it indicates that this employee is eligible to work. And no, Raquel, to my knowledge, there is not a query that pulls that information. I have actually looked to see. Does DFA need to be notified if we get an 8233? No, we do not need to be notified if you get an 8233. Unless the particular country that the employee is from is not in the drop-down list for you to choose from. Otherwise, you would simply input the 8233 information into the system as it is presented, and the system will automatically calculate what it is. DFA does not need to be notified of this particular type of employee. It is all the responsibility of the agency to ensure that the agency is in compliance with the IRS rules and regulations. Any other questions around this particular area? All right. So the next thing I wanted to talk about is payroll reconciliation. And this comes up frequently, especially during this time of year, because auditors have reached out with various concerns of things that we are not necessarily catching. So a full payroll reconciliation is actually a collaboration between the agency HR and the financial accounting. We do not expect HR staff to be accountants, and we don't expect our accountants to have the information that the HR staff has. So it really is a symbiotic relationship between the two areas that need to be functioning in order to ensure that payroll reconciliation has been completed timely, and we're not going to get audit findings due to payroll errors. So as we have stated in the past, complete the biweekly payroll reconciliation after your payroll journal posts, and any adjustments to the financial posting may be needed to correct the accounting information on the fin side. Any corrections that you make in HCM will not carry through to fin once payroll has posted. Those corrections have to be made on the fin side, which generally have to be made by your financial accounting team. I don't know that most of your HR staff have the ability to make changes on the financials in fin. To my knowledge, that is the role of your financial accounting team to do the journals, to make those corrections. So that is why we're saying this is a symbiotic relationship. I apologize. Most of the issues between the financial accounting and the HR reports are caused whenever the payroll journals are changed due to incorrect data input or budget constraints. So, as you all know, on a biweekly basis, payroll reaches out and says we have payroll journals that are not posting. Whenever we do a change to those payroll journals, it could create a reconciliation issue between FIN and HCM, because we are now changing data that came out of HCM and importing that data into FIN. FIN is our book of record. HCM is a subledger. So when the auditors come in and they say, this is what your book of record, this is what FIN says, and they go to pull the same data from our subledger from HCM and it doesn't reconcile, then that is because potentially we made changes to the payroll journals between them coming out of HCM and them being posted in FIN due to incorrect data or budget constraints. There's also issues for timing of transfers from one agency to another. So if an employee transfers from one agency to another agency and that's not input timely into job data, that employee would potentially post to the original agency as opposed to the agency that they moved to. And it would be the responsibility of your financial accounting team to actually do a journal entry moving those expenses to the receiving agency. It's a collaboration between the two agencies. We can't just make an entry from one agency into another agency without that other agency approving it. So it is a collaborative effort here to determine if for some reason we are being charged for an employee that terminated with our agency and has moved to another agency. The same is true on the other side, where we should be making sure that we are getting charged for all of our employees and we're not missing someone's payroll that should have been charged to us. The third thing that causes a lot of discrepancies on the financial accounting side is when garnishments are withheld from paychecks, but cannot immediately be remitted to the creditor. In the past, those monies were held on the HCM side. That has changed about a year and a half ago. That changed so that now we transfer that liability into FIN and we will put those funds on hold, meaning we're holding those funds to remit to the creditor, but we do not have an order to pay those funds out. So oftentimes you will see the liability side where the garnishments will show that they are not being cleared out. They're still sitting in your liabilities and are not being cleared out. So that's generally the third area where payroll reconciliations have issues that we have to explain to auditors. Okay, go on to the next slide, please. One of the easiest ways to verify that your payroll information, at least the dollar value, is correct when it gets moved from HCM to FIN is by verifying your HCM accounting line details to your payroll register. So the first thing you would do is you would run your HCM accounting line details report, and that report will give you this query that you see on the top right. It provides all of the information on every employee, and it has both a run date and a budget date. So when was it ran versus when is the budget appropriate for it? And as we know, payroll gets split according to what day that payroll belongs to. So we do have to look at both the run date and the budget date. The payroll register you would run for the pay period, and I have shown here what your payroll register looks like. It provides you with all of the payroll data for each employee. This is only the data that comes from the employee's pay. So it does not account for any of the employer liabilities, which is why a lot of people don't know how to reconcile your payroll register to your HCM accounting line details. So next slide, please. So what you would need to do is you would need to create a pivot from your accounting line details, and you'll use both the run date and the budget date for the columns. And this will produce the pivot that you see in front of you. You will notice that it has an assortment of dates based upon whether it is a run date or a budget date, whether it is an off cycle or an on cycle. And so it's really important to know what date you're looking at because this payroll register was for pay period ending 9/27. We know that all of the data for 9/27 should be in the September 30th budget date. And we've identified that it is in the roll that has all of the colors on it because it is the 9/30/2024 payroll data from OnCycle. And you can easily take this information and match it to your last page on your payroll register, which shows you what your gross pay and taxes and deductions were for each individual employee. So the easiest thing to match right off the bat is the blue. And you will notice that in line 2269, we have 40,790. And if we look on our payroll register in the far right under net pay, we see 40,790.26. So that is the amount of money that will actually be paid out to the employee. That is what net pay indicates, is that this is going to be paid out to the employee. The second thing that's easy to identify is the ones that are in yellow, and that is your gross pay. What is the total amount of your payroll? And that is indicated under your expenses in all of your 520 accounts. So we have multiple 520s. We can have 520 1, 2, 3, 4, all the way up to 9. Anytime you have a 520, that is indicating that it is gross pay. So you would take all of the numbers in your 520s, and those would add up to what your gross pay is. The next one that's a little tricky is your tax types, because the agency has FICA taxes that they are required to pay on employees' pay. And the liabilities indicate all of the taxes. So it's the taxes that not just the employer pays, but the amounts that were withheld from the employee. So the way that you would match those is you would take your tax types total from your payroll register, and you would add it to your FICA expense, the 5213 account, and that should match what your liability account is, your 2239. So if you take your 2239 and you add it with your 5213, which is your FICA expenses, it would provide you with the amount of taxes that were withheld from the employee. And then the final one, of course, is all of your other benefits, where we withhold from the employee and the employer has matching expenses. And you would do the same thing with your employee or benefits, and that's what's indicated in the green areas. So you would take your liability, your 2235, and you would add that to your liability expenses, the expenses that are shown in your 521s. And the difference in those two would be the amount that was withheld from the employee for their liabilities. Next page.
We had a quick question I answered in the typing, but I'll let everyone know. They were asking about a query for the payroll register. It is not a query. You can find it in HCM. And I wrote the path there, but I'll say it out loud. You'll go in menu, then payroll for North America, then payroll processing USA, pay period reports, and then finally payroll register. And it is in the chat as well on the question and answer.
Thank you. All right. So your accounting team will verify that the HCM accounting matches what has been posted in Fin. And so what your accounting team does is they run NMSGL journal line in Fin, and they create a pivot for the payroll journals. So essentially they pull out all of the payroll journals from the financial information that is in Fin, and they would compare the Fin pivot to the HCM pivot. So the data that you have just verified against the payroll register, they're now verifying against the New Mexico journal line. They also compare the AP journals to the information that's in Fin. And what the AP journals tells them is, was the money paid for the liabilities? Did the money actually go out the door for all of the accounts that we are supposed to be paying? So all of the ones that were that were shown as a negative, the AP journals should match those numbers to ensure that we paid the taxes, we paid the benefits, and we paid the employees. And that's where they may get a discrepancy, especially around the garnishments, where they're saying, well, we have this much in liabilities, but we did not pay them all. Why didn't we pay them? And that would be because somebody had a garnishment that was on hold. So generally, if there's a difference between the Fin and HCM, it's either due to an employee transfer or a garnishment. So the accounting team may need your assistance with running some of the garnishment queries because only HR staff has access to some of those. So if your accounting team is reaching out and saying, I have a discrepancy between my payments and my liabilities, generally you would run the garnishment queries in order to ensure that all of the garnishments were cleared out, or if you have garnishments on hold, you can identify them. Next page, please. So some of the other issues to consider, and I must say our HR team is very good at this. We know in payroll because we get corrections on these all of the time. But these are items that some of the auditors are going to be looking at. And as we get more and more audits that dig deeper into payroll, these are some of the areas that they will probably be asking questions on if they think that there is a discrepancy. So of course, we want to make sure that all of our employees are being paid, that they're being paid at the correct rate of pay, that they have the correct hours to which they're being paid for the hours that they worked. And then we look at their benefits. Are their benefits correct? Are we charging them in the correct tier? Are we charging them for the correct type of benefit? Are their taxes being taken out? It's really interesting how many times we make corrections because their taxes weren't taken out, or the employee had an old W-4 where they had additional taxes, and so now they have 0 paychecks because when they were rehired, we didn't change their W-4 and they had all of their paycheck taken for taxes. So that is an area where we actually see a lot of impact that employees will bring to you immediately. That's one of the few areas that employees will actually bring to you immediately if it is not to their benefit. If they're not having FICA taken out, and they should, they're not going to mention it. So it's really up to us to make sure that we are paying attention to that. Another one is your para, ERB, and RHCs. Are those being taken out? Are those being taken out at the correct rate? You know, we have a variety of plan types for para, and we need to make sure that we're withholding at the correct plan or at the correct rate. And then some of the things that your accounting team should be looking at is, are the expenses charged to the correct funding? Because if we are billing a grant or a federal funding source, we need to make sure that we are only charging the appropriate charges to those fundings. And that's an area where your accounting team should be looking. We should also be looking to make sure that they're using the correct leaves, that it wasn't coded as sick time when it was annual time, that if it was actually FMLA time, that FMLA was accounted for. And then the final one is the correct TRC codes being used. You know, are we charging it to regular work? Was it extra hours? Was it admin leave? Those types of things. And I can give you kudos. Like I said, we see very proactive agencies that do ensure that these things are done, and they are reconciling them, and then we're making corrections as needed. Most of the items on here can be corrected through HCM and through payroll. The only one that cannot is the expenses charged to the correct funding, and that has to be corrected for any past payroll through a journal entry by your accounting team. It is, however, HR's role to make sure that it gets corrected in HCM moving forward. So if the accounting team has to do a journal entry to correct the funding, they should be notifying you to correct in HCM the setup on the employee. Next slide, please. All right, I think that's all of that area. Do we have any other questions on that particular section?
Nothing coming up.
And if any of you would like some additional information or need some assistance with payroll reconciling, please reach out to us. We are more than happy to help you understand exactly what you should be looking at and where you can get this information. Leslie's asking when and where this video will be posted online so we can review it later. It will be posted on our website, on the Central Payroll website with the other payroll trainings. And all I can say is we can get it up as soon as we can get it up. This is a short week, and unfortunately, payroll is processing right now. So I cannot guarantee it will go up this week, but it will go up as soon as we can get it up there. And like I said, Leslie, please reach out to us. Alex is more than willing to help you. Claudette is willing to help you. Suzette, myself, Joel, all of the management team is here to help you. If you need assistance with how to reconcile or how to identify some of these issues, we are definitely one of your advocates and are willing to assist you in getting that information or training you on how to do it. All right, moving right along. Cleanup for calendar year end, because we are coming up into the end of November, meaning the end of the year is right around the corner. So one of the things that we have to make sure at the end of each year is that we have accounted for any employees that have paid us back funds that we have not allocated against their payroll. So if agencies have collected overpayments directly from an employee, I know some of you may have overpayments that you're collecting directly from the employee as opposed to having to notify central payroll. A lot of times when we have longevity bonuses or retention bonuses that we've paid and people have moved on to other agencies, meaning they have to pay those back, agencies will just collect them from the employee without letting central payroll know. If you have collected any funds from an employee due to an overpayment that went through payroll, central payroll needs to know, because that does impact their W-2. They are allowed to get credit against current wages for any amounts that were paid back. And it would also impact their FICA, PARA, and RHC withholdings. So please, if any of you have collected any funds from an employee directly that payroll has not already been notified of. There are some where we know the agencies are collecting because that was what they were instructed to do from central payroll. These are ones where central payroll has not been notified, adjustments have not been made, corrections have not been made, that we need to make adjustments prior to W-2s going out. We only have between now and the end of December to get those into the system so that we can correctly report their W-2s. Another thing that you may hear from employees as we get close to the end of the year is employees will be saying, I'm not having OASDI withheld from my check anymore. So OASDI, which is part of your FICA taxes, does have a maximum. So if an employee's wages exceed $176,100 this year, once they reach that point, OASDI will stop being withheld from their checks. There's still, the excess is still subject to Medicare, so they'll still see the Fed Med coming out, but they will notice an increase in their paycheck and want to know why the OASDI has stopped being withheld. And that's because they have reached their FICA max. The system does this automatically. So if they have a paycheck where half of it is subject to FICA and the other half exceeds, they will only have the portion that was subject to FICA charged taxes on, and the rest of it will not be charged. So in the past, we have had employees that have reached out wanting to know why their paycheck has increased or why we're not withholding this anymore, what's going on. And it is because these employees have reached the OASDI cap for the year, and the rest of the year they will not have the OASDI taxes withheld, but they will restart immediately on the January 2nd pay period. The other item that has a max is Paramax. And unfortunately, the Paramax, the system does not work that way. We have to actually go in and turn off the para contribution. And then we have to calculate if we have withheld in excess of the amount that is being entitled to. And we will reach out to the agency and let them know that this particular employee has reached their Paramax and that they are due a refund of X number of dollars. And we need to get both the Paramax or the para withholding turned off immediately so that it doesn't compound over the next pay periods. And then we need to get the refund done within before the end of the year in order to ensure that their W-2 is correct. What in the past we've done this and it's worked well. Where we've run into issues is that employees aren't having their para turned on immediately when the calendar year rolls over. So we have had to go back now and take additional from them because their para was turned off in January and there should have been withholdings from them. So we need to make sure if you are notified by Central Payroll that para needs to be turned off, that we are also making sure that it gets turned back on for that January 2nd payroll. There are a lot of things that go on in January. It's very busy, but this is one of those items where we definitely need to make sure that we are turning back on para in January for that first payroll anytime we have turned it off. All right, let's see what questions we have here. I believe that Paramax for this year is $350,000 in wages. Usually the only ones that meet that threshold are our doctors and our psychiatrists. So there are very few agencies are impacted by it, but there is the potential for others to be impacted by it as well. All right, next screen, please. All right, so as you've heard me say a lot, W-2s are coming, and it is the responsibility of Central Payroll to produce the W-2s. One of the things we need agencies to do is to ensure that all of your terminated employees have correct addresses in HCM. I don't expect you to reach out to them, but if a terminated employee has notified you of a change of address, we definitely need that change of address to be input into HCM, because HCM is going to print the addresses on the W-2s that they will be mailed to. And some of you may know, some of you have not had the wonderful experience of returned W-2s. But every year we do get a significant amount of W-2s returned because the address is incorrect. And it is up to the agency to then reach out to the employee and correct the address and resend the W-2. So if a terminated employee reaches out to you and provides you with a correcting address, please get that into HCM before mid-January, so that when we print the W-2s, their address on that W-2 is correct. CPB will be running a TENS match again to ensure that we are reporting accurate data to Social Security and IRS. If CPB notifies you that an agency has a mismatch from Social Security, agents will need to get a copy of the employee's Social Security card and match the information in HCM to what is on the card. A lot of employees will come and they'll tell you, I got married, changed my name, but they never notified Social Security of that name change. And we cannot change a name in HCM unless Social Security is aware of that name change, because otherwise we are not matching data. And so anytime they ask you for a name change, they should be presenting you with a Social Security card that indicates that new name on it. If you do get a notification from Central Payroll that we have a mismatch, it is your responsibility to get that information corrected in HCM prior to mid-January, so that when we report the data to the Social Security and the IRS, we are matching what their records are indicating. If an employee passed away, agencies should review the business unit in HCM to ensure that they will receive the deceased W-2. When an employee passes away and you notify Central Payroll that that employee has passed away, Central Payroll will actually go in and change the business unit that receives the checks in order for DFA to get the check and deal with the beneficiary funds appropriately. But oftentimes that doesn't get changed back to the agency. And so when we print out W-2s, instead of the W-2 going to the business unit that the employee last worked for, it gets sent to DFA. And then we have to spend time looking to see which business unit should have received that W-2. So please go in on any of your deceased employees and make sure that the business unit for checks is indeed your business unit and not the DFA business unit. Active employees with access to HCM can receive their W-2s electronically. Please remind all of your employees to select electronic W-2. Last year, I think we printed 16,000 W-2s, and that actually is a significant cost to the state when we are having to print paper W-2s. It's not just the time and labor, but the printing, the paper, the ink. Agencies then have to deal with stuffing envelopes, mailing them. It's a significant cost to the state when we have to do a paper W-2. So please remind all of your active employees that if they would like to get their W-2 electronically, it's a very simple way. You just go into HCM, select electronic W-2s. You will also tend to get your W-2 quicker if you get it electronically, because paper W-2s have to go through all of the processing, meaning that usually you're not going to get that W-2 until the very end of January into February. But with the electronic W-2s, as soon as we generate that file, those W-2s are available in HCM and can be downloaded upon demand. So any employee that has access to HCM, please request that they do an electronic W-2, and save us the time, labor, and expense of having to print and deal with a paper W-2. One of the issues that we had last year, and I'm going to make a point here. If an employee reaches out to you and requests a duplicate W-2 for 2025, this is the response that you give them. Duplicate W-2s cannot be processed until February 15th. Please wait until February 15th, and if you have not received it in the mail at that time, you can request a duplicate W-2. Do not take the employee's information. Do not make a form duplicate for W-2 and hold it. Last year, Central Payroll had over 800 requests for duplicate W-2s. 400 of those came in on February 16th. Of those 400, 300 were dated at the beginning of January. We had not produced W-2s. We had not printed W-2s. We had not mailed W-2s. They had not received their original W-2 because it had not been sent out. And so we should not have taken the time to fill out the form requesting a duplicate W-2. We should not have submitted it in FSS, and we should not have sat on it until February 15th. If Central Payroll sees a form for a requested duplicate W-2 that is dated prior to February 15th, we will deny it. You should not be getting any request for a duplicate W-2 prior to February 15th. And if you do get a request, you should ask them to please wait and recontact you if they have not received it by February 15th. Any questions on this slide? SMARS does not process W-2 requests either. Thank you, Ali. Yeah, do not send a W-2 request to SMARS because SMARS does not deal with W-2s, period. That would definitely be a waste of time. All right, let's go ahead and move on. Just some information for you to have so that you, in case you were wondering, personal days must be used by December 31st. Any personal time that's not used by December 31st will be lost. Additionally, the new accruals for 2026 will be added to the pay line for the pay period ending 1/2/26 and will require your approval. Hours awarded for personal days may need to be adjusted depending upon the employee's work schedule. So if you have an employee who is working 4/10s as opposed to 5/8s, their personal time that is awarded will be 16 hours, and you will need to adjust that to 20 hours to allow them for the 2 personal days at their 10-hour day shift. If an employee takes a personal day, it is for the day. Personal days cannot be split. So if you have an employee that works 4/9s one week and then 4/9s and 10 the next week, or a half a day during a week, they use the day. So whatever hours they're scheduled to work that day is what they get to use. If they choose a day where they are only scheduled to work 4 hours, they do not get to use 4 hours on another day. They only get to use one personal day for the number of hours that they are scheduled for that day. Any splits that you have in personal days must be corrected in the system before December 31st. So payroll is really good at notifying agencies if they have split personal days. The only exception to this is people that actually work overnight. So they are working an 8-hour shift that may be encompassing 2 days because it runs from, say, 9 p.m. to midnight and then midnight to 5 a.m. So those are the only times when personal days can be split, but otherwise a personal day can only be for the amount of hours worked during that particular day. Any questions there? Okay, next slide, please. Leave accruals. Excess annual leave above the allowable maximum will be removed following pay period 1/2. So you have until January 2nd to use any of your excess admin leave, and it will be removed the following pay period. So that's a little different than your personal days. Your personal days have to be used by December 31st or they will be lost. Excess annual leave, you actually have until January 2nd before it will be lost. Additionally, we have the sick leave buyback, which according to the statutes will be paid out the first full pay period in January. So that will be pay period ending 1/16/26. If you have an employee that participated in July, they're not eligible for participation in January. If they did not participate in July and they have an excess of 600 hours of sick leave, they can participate in the buyback and it will be paid out on the 16th of January. Next slide, please. Okay, we do have some employees that are claiming exempt on their W-4, and this is something that has to be renewed on an annual basis. So in order to claim exempt on your W-4, you cannot have any income tax liability from the previous year or expect to have any federal tax liability in the current year. So when you claim exempt, you are certifying that you meet both of those conditions. And the easiest way to verify that you meet that condition is on line 24 of your 1040. So if your 1040 for 2025 says your total tax on line 24 is 0, then you may potentially file exempt because of the one big beautiful bill and the tax exemptions for overtime. We may have some people that actually qualify, but the easiest way to determine that is you have to have a 0 on line 24 of your 1040. If you have 1 penny on line 24, you cannot file exempt. And that is one of the things that a lot of people do not understand. They think that they can file exempt because they want to have less taxes withheld. You cannot. There are certain rules and regulations under which you can file exempt. Now, if you choose to not have any taxes withheld, then you should be looking at your W-4 and whether or not you qualify for any of the credits or the exemptions within the W-4 as opposed to putting it as exempt. So employees can use the tax estimator. So I did provide the link again, that's on the IRS website, which will indicate to you what the IRS thinks your taxes will be for 2026. And you should be using both the tax estimator and the information on 1040 line 24 to certify that you are exempt from any withholding. Okay, next page. Oh, and those W-4s, if you have a W-4 with someone who is claiming exempt, those are null and void after February 17th. So on February 17th, if an agency has an employee who claimed exempt, then on February 17th, if they have not given you a new W-4, you must change their tax withholding to single 0. Next slide, please. The next one for notification of employee's death, and this is something that we have actually had a lot of discussion in payroll for the recent. We have been noticing that agencies are delaying notifying us when an employee dies, whether that's because the employee's families are not notifying you timely or you're caught up doing other things, I couldn't say. But we are seeing notification of employee's death after payroll has run. And what that is causing is for us to then have to pull funds back from the bank because of direct deposit setups. And we have a limited amount of time under which we can do that. And we have had discussions with our attorneys. If we send a direct deposit to an employee's bank account and that employee has passed away, the funds in that bank account may not be going to the person who is entitled to those funds. And you would be on the hook for paying the funds to the entitled beneficiary if for some reason they went to the bank account and somebody else received those funds. So it is imperative that the rules around deceased employees are followed and timely notification is made to payroll so that we can ensure that we are not sending these funds to a bank account that we do not have control over and may not be able to pull the funds back from. So below are the procedures for addressing the death of an employee. First, you do not terminate the employee. This is the responsibility of central payroll, because central payroll also has to look at the timing of those payments. As we get closer to the end of the year, we can have an employee who passes away in one year and doesn't get paid until the next calendar year. And there are tax rules around how we are supposed to deal with that. So we are asking that you do not terminate the employee and simply notify central payroll. You should, however, access and maintain time reporter data and assign it to the inactive work group effective the day after the last paid day. So for an example, if the employee passed away after working on a Tuesday, the effective date would be Wednesday. If an employee passed away on a Sunday after working on a Friday, the effective date would be Saturday. Okay? Because that would be the last paid day, the day after the last paid day. Again, immediately inform central payroll of the employee's passing. There's a notification of death form, and you should submit it through the FSS system. We do pay close attention to those notifications of death when they come in. So even if you submit a notification of death, say in pay period 12, when we're currently in 11, as long as we have not processed payroll completely, we will pull that employee's paycheck, because you have notified us timely and we have the information in order to make sure that we do not send out payroll to an account that we should not be sending it to. You are required to approve all payable time up to the inactivation date, and you would still need to submit the terminal leave request through FSS so that we can pay out any leave time. Deceased employees are entitled to their entire annual leave bank. It's not maxed at 240. So if an employee passes away and they have 260 hours annual leave, they get paid for the full 260. We do not cap them at 240 if an employee passes away. Once that happens, it is the agency's responsibility to determine the recipients of the final payments. So let's go to the next slide, please. So the deceased beneficiaries, there has been discussion around this as well. And New Mexico has some interesting laws. So required documentation for a spouse, you must have the substitute W-9 and the affidavit of the deceased employee's spouse for final payment. Both of these forms are in the deceased packet. They can be filled out and submitted through the FSS. There are no other forms really required for this. Now, if the beneficiary is not the spouse, if it is a brother, sister, child, mother, aunt, uncle, whatever, then we have one of two areas that they could be considered. They could be considered the personal representative of the employee's estate, meaning that either there is a will or they have gone through probate and the courts have said this person is responsible for collecting all funds due and disseminating them to the appropriate beneficiaries. So if somebody is a personal representative, they should submit a W-9 and either a letter of testamentary or a letter of administration. One is for a will that identifies them as the personal representative. The other is because the probate court has identified them as the personal representative. Those forms must be submitted. The second instance is if they are a successor, meaning that the estate was not large enough to have to go through probate. And this is where we're having a lot of issues, because there is nothing that indicates who the successor is of a small estate. And there is a substitute W-9 and an affidavit of a deceased employee's successor for final payment. But according to our legal counsel, this does not take us off the hook if we pay it to the wrong person. So we still need some sort of proof that the person we are paying this out to is indeed the person who is entitled to receive this payment. So in the past, we have accepted the life insurance beneficiary form or the para-beneficiary form, and we are no longer going to be accepting those because those may indicate more beneficiaries than we are actually paying out to. So we are no longer going to accept those as a proof of successor. They will need to provide some type of formal documentation that indicates they are indeed the successor of the deceased employee. The three things that HR should be getting is they should be getting the death certificate. We have found that some HRs get notified of a deceased employee and they never get a copy of the death certificate. They should be getting a copy of the death certificate. They should also be getting the proof of the beneficiary. So in the event of a spouse, that would be the marriage license. In the event of the personal representative, that would be either the will or the probate court's findings. And then in the event of a successor, there would need to be some sort of document that says that this is the person who is entitled to receive this money. All right, let's look at questions here. Is there a query to see who is not scheduled to get an electronic W-2? Yes, there actually is. Alex, do you know what that query is?
I do not off the top of my head. I can get it to you,
Okay.
Lori.
Yeah, we will get you that, Lori, because there is indeed a query which indicates who has signed up for electronic W-2 and who has not. All right, so for the deceased beneficiary transactions on the DFA platform, do we submit only the affidavit of the deceased employee's spouse for final payment and also substitute W-9? But the platform is asking for proof of beneficiary. Do we need to attach anything to this? Do we submit the marriage certificate? Yes. For the proof of beneficiary, you would submit the marriage certificate, or in the case of a personal representative or successor, whatever the document is that proves they are indeed the person who is entitled to those funds. Oh, there, Whitney has provided the W-2 query for you, Lisa. It's NMS_PY_W2_no_op_out_print. Thank you, Whitney. Okay, any other questions on this? All right, so I know we have gone over a lot of things, and I can't even say we're done yet, but these are the action items that I want you to be aware of as you move forward through to the end of the year. One is verifying the addresses for any of your terminated employees for W-2 mailings. Any deceased employees that need to have their location code reset for the agency. Any new W-4s for your non-residential employees or employees that is claiming exempt. Remind employees that W-2s can be received electronically, and we would like for them to do that. And the last one is one we haven't discussed yet, but I put it on here just so y'all would have all of these reminders in one place. And that is to select an FSS agency administrator if one has not been identified. Sorry, that's a typo. It should say if one has not been identified. And with that, I thank you for your participation, and I'm going to turn this over to Alex.
I'm still muted. All right, thank you, everyone. So going into that last part, what is FSS? Oh, you had a question. FSS, the form submission system, also known as the payroll module. That's how everyone in the HR community submits forms, all the forms that Central Payroll gets. It used to be done via email, but as of the beginning of this calendar year, we launched FSS and has been an awesome success. It's made everything run a lot smoother. We've gotten a lot of great feedback from the HR community regarding it as well. One thing that we just launched not too long ago, I think we mentioned it in our last quarterly meeting, is the administrator or admins for the FSS. Each agency is required to designate an FSS administrator by completing the form submission system administrator access agreement form. And that is on our webpage, and we do have the link here on the presentation. The FSS administrator is responsible for granting access to the FSS for their agency and to manage any type of user updates. You should be conducting periodic audits to ensure that terminated employees no longer have access to the system. Engage in training sessions with Central Payroll Bureau trainers to fully understand the role. So you can request training once you are given access as an admin, or you can even join us on our weekly open hours that we have on Wednesday, and we'll go over that here in just a minute. The FSS administrator is also accountable for overseeing the requests submitted by their agency to Central Payroll and ensuring that all requests marked as returned are addressed promptly. This involves either correcting and resubmitting these requests or canceling as necessary. Many of you that are in FSS received emails from me or Claudette a couple months ago doing a major cleanup of FSS. We had some requests that were in return status all the way going to the beginning of FSS, the first payroll when FSS was launched. Those requests that are marked in the return status are not accessible by payroll or by Central Payroll. They're stuck in your agency's hands, and we can't do anything with them. So in that return status, you want to make sure that you do act upon them. We've seen some that are TLBs that hadn't been processed, some manual warrant requests, additional pays, all type of requests that were stuck in that return status, and that could be affecting your financials, especially if it starts crossing into a new fiscal year, can be affecting your employees' pay. So, making sure that those returned requests are worked with as soon as possible is very important. There is also a new function for agencies that a lot of agencies haven't seen yet. There's the dashboard that gives you some statistics about the requests being submitted. And so if you're going to use that as a training tool or a tool to see how your agency is doing regarding these requests, you want to make sure that those requests are updated as well. Having those stuck in return status is going to greatly affect those statistics on those charts that you see in that dashboard. And again, with any of this, feel free to reach out to me or Claudette, and we can go into a lot more detail regarding the admin and even the dashboard that just launched not too long ago for the agencies. Any questions on this, on the admin access? All right. And again, every agency should have one FSS admin. We do request or suggest it should be an HR manager or HR leader. But again, it's up to the agencies to assign that. We have some agencies where I believe it is the CFO, which is fine. You know, the smaller agencies, it might be the CFO. It's up to your agency to decide who that FSS admin is. New forms coming soon. So Central Payroll is working on some new forms for submission. Current forms are not rounding per pay period, causing pending issues within HCM. The new forms will address these differences when you submit paperwork. So we had updated most of these forms not too long ago with just some different verbiage. We got rid of that whole submit via email to submit via FSS. And we added a few drop downs. So in that, we are going to make those changes to those that do have that automatic calculations for you so that these rounding issues don't happen anymore. Because currently, many of these carry forward that fractional cents into the next pay period when additional pay is for multiple pay periods. Rounding should occur on a bi-weekly basis and not carry forward these payments. So these fractional cents cause issues with payroll reporting, and Central Payroll has to correct these forms before they can process. So we're going to make it a lot easier for you guys and a lot easier for us as well. Payroll 101. This is something I'm really excited about. Many of you have taken the first ELM course that we created, that Claudette tirelessly worked on and we had published, which is our direct deposit admin or direct deposit access. And this is our second course that we're having published. We've been working on it for quite a while. We're going back and forth as far as how much information we want to put on this, if we want to go into great detail. So we're hoping to have this out as soon as possible for you guys, and we'll make a big announcement about it. We're really excited. This is going to be a course that we recommend everyone taking, and it's going to be really, really good for any new HR personnel or anyone working in payroll. You know, that's something that I know I've heard when I first started that there wasn't enough information out there, enough training. So this is going to be one aspect. And of course, we still have that one-on-one training that me and Claudette offer as well. But this is a great tool that we hope that you guys will utilize. And we're planning on creating a lot more ELM courses as time goes on. Go ahead, Audrey.
I was just going to say, you're saying you hope we take it. It will become a required course in order to get payroll access in HCM. So it's not a we hope you will take it. It's a we know you will enjoy it and provide us with lots of feedback once you do take it. But it will be a requirement once we post it for any new access to payroll in HCM that the employee complete this course prior to us granting that access.
Awesome, thank you. And this is what I mentioned earlier about our open hours. Every Wednesday, we hold a Teams meeting, an open Teams meeting from 2 p.m. to 4 p.m. where anyone, you know, we've had people that are actually not in HR and ask about some certain questions. Anyone can join. It is available to pretty much any state employee. We have the link on our page, our webpage. And we also have it on our Claudette and I's email signature, including with the information. It's a great way for people to share best practices. We've had HR employees who join and help ask each other questions and answer each other questions. We've learned from that. So it's a great community forum. The only thing that we ask is that this is open to anyone. So you want to make sure that you're not sharing any sensitive information. If we need to go into that, we can go offline from that open meeting and discuss your questions that way. But again, we've had people that will join for those 2 hours that were open and just sit there to listen in on the questions that other people ask. Again, you don't technically have to participate. If you just want to sit there and listen, you can. But you know, the more people, the more information we get to share, the better we all grow. And here's the information for the trainers. You have me and Claudette's information here, our phone numbers, our individual email addresses. We also have a trainer email address, which is at cpbtrainers@dfa.nm.gov. This is going to be the best way to get a hold of us just in case, either me or Claudette are on vacation. The CBB trainers, one goes to both of us, plus all the leaders here or managers here at Central Payroll. So if none of us can get to it, you will get a response from that email address. But we're usually really good at getting to you right away. We also have the link to our webpage, to the Central Payroll page. And many of you don't know this, but the DFA does have a YouTube channel where, it's not only Central Payroll or financial control division, but every part of DFA will post videos on that page, including Central Payroll. And we do have some good information on there. This is also where we will post the video for this recording, for this meeting here. As Audrey said, it is a short week, being the holiday week, so we most likely will not see it until possibly next week, middle of next week. We do have to, make sure I cut it, edit, and format it so it's available to be uploaded to YouTube, but that's where you can find it. The actual presentation, the PowerPoint presentation, will be available on our page probably by the beginning of next week as well. Just again, it's Cher who or our IT team who posted to our page. So I'm not sure of their workload, but I'll let them know as soon as we're done here to post it. And most likely it'll be up there by the beginning of next week here. But that's all we have here. Anything extra that you want to add, Audrey?
No, I want to thank everybody for attending. We're giving you back a little bit more time. We knew there was going to be a lot of information. We just didn't know how long it was going to take us to cover it and what questions might have ensued, which is why we scheduled this for 3 hours, but it looks like you're going to get almost a full hour back. Thank you everybody for attending. Enjoy your Thanksgiving. I hope everybody eats way too much and has some nice relaxing days. We appreciate all of the hard work you do, all of your efforts in collaborating with payroll. We hope you see us as partners and are able to really experience some additional growth and well done, guys. Just well done. The things that we are seeing from agencies, the growth that we see, the way you reach out and are willing to help us and assist us with everything. I just think that we have really had a year that we should be very thankful for, because we really are proving how dynamic everybody is and how well we can all work together to be successful in this area. So thank you all. Enjoy your holidays. And that's all.